than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars.
Hey guys and girls, and welcome to this week's episode of the No.B.S. Birchy podcast. I'm your host, Nathan Birch. This is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. And that we are. Want to talk a little bit about something, different today. I've got a few little notes here. But looking back 6 years ago, 7 years ago, 5 years ago, a lot of people back in the day, I started making these videos. I was actually just watching one of the videos just like 2 or 3 days ago. I don't watch my videos. When I'll put the videos out, I just say it, my staff put it out, and I don't come back to it again. I don't like listening to myself. But I was watching these videos because I was like, I have to sit there and see what I spoke about when everyone thought I was a dickhead, right? And everybody loved me before. And then for a period, everyone was like, Nathan, you're off your head and everything's wrong and all this sort of stuff. And, thinking that I was having a mental breakdown and all different stuff that I was saying on a video. And I said that the economy was going into a recession. I actually made these videos saying the property market was crashing and was going to crash, which it did from 2016, 17, 18 and 19 until they started printing heaps of cheap currency. And it was funny that I actually looked back and I was like, wow, I actually said that. It's, every other property company out there would be going, oh, property market's great, buy up, and all this sort of shit. But, people were, saying, why are you saying this sort of stuff? People were saying, why are you saying that we're going to go into recession, which will be very good, right? Because they didn't understand of the stimulus packages. People didn't realize what negative interest rate policy was because interest rates were already like 1.5% anyway. People didn't realize the state of our economy because they listen to the news and trust their news as a holy grail for their life, really, which is just really a propaganda outlet for the elites and the controlling hands. A lot of people didn't know a context or had ever heard of a currency crash, and dealing with a dollar that you have used all your life, it's a bit hard to get your head around the fact that, oh yeah, this thing's not going to be around, but how long has it been around for, and all those sort of things. And hyperinflation, like it was never really, no one ever knew what a hyperinflation was. And here we are talking about it, and everyone has a very good context about what a hyperinflation looks like, etc. But I look at articles, like I've got this one article here, and it's got a picture of this fellow with the orange hair and the orange face, Mr. Donald Trump. And it says here, the tumultuous year, the 2016 global economy in 10 charts. And it goes on to talk about oil prices have risen more than 50%. So oil was $40, went down to $30 and gone up to $60. So it had sort of changed that period by 50%. When we look at it now, oil was only meant to go up to $100, right? Oil at $100 means the system's about to implode. Oil's gone way higher than $100. And our economy is starting to show the problems of that because we're having hyperinflation. Over the last 5 years, 7 years, we've been going through depression. People don't realise. A definition of depression is that your lifestyle is not what it used to be. People feel that they're richer, but they're only richer because it's inflation that's making them richer, and it's not actual real wealth. They're losing the value. They're losing access to everything that they had once before. There was interest rates in the US, they were going down, but then they went back up. And that's a very interesting one. I haven't got a chart for that here today, but I think in a future episode or maybe on a Facebook Live, I could talk to you guys about the US charts and what actually happened in the middle of the GFC, which is around 2018 when it first started really showing its face. We saw the same thing happened in the US as to what's happening globally right now, which was interest rates had been going down for a decade. Then they went up in I think it was about 2018 as they did a quantitative tightening program. And when they did quantitative tightening, they were meant to take all the money that they printed back out of the system. But the problem is that it only, like we've got, let's say it's 2018 and the GFC occurred in 2008. What they hadn't accounted for is a lot of the bonds that had been purchased from the banks and institutions 10 years prior had a 10-year maturity rate of the bond. So the 10-year bond was maturing and everyone's having to pay higher rates, so then they had to lower the rates again. So if we look at the US in 2018 and start of 19, that increased rates probably 2%. They've gone up from zero interest rate to about 2%. And then very quickly they had to drop the interest rates 0.5%, 0.5%, 0.25%, 0.5%, all the way back down to zero. And it's interesting to look at that and to look at the news articles that were from 6 years ago, 7 years ago, the news articles from 2 years ago. I remember them coming out with news articles saying that in 2020 that the property market was going to drop by 40%. But why was it going to drop by 40%? Well, there's no jobs and all these sort of things. But no one had looked at the fact that totally raped the whole currency that we use, and our dollar had been printed down to oblivion, and everyone's feeling richer, but they're being taxed due to inflation. So everyone's paying the cost of it now. I'm paying more for it. You're paying more for it. Everything's gone up in value. Debt holders are paying less. Those that have had access to debt have been paying less. If the system changes back around, which is where we're pushing to now, all the people that benefited are going to blow up. So they can't go back from where they've gone. So looking at back in 2016, we had APRA come out here in Australia, and they tried to control the amount. Like, we should have technically had interest rate rises in 2016, 17 and 18, but our economy couldn't support higher interest rates. So what we had was measures put in from the controlling board of, government sort of areas, and they put in measures to ensure that people couldn't borrow and overextend their borrowing, which started to cause a recession in itself, a retail recession, and there was a recession happening back from just that movement happening. We saw everything starting to go to digital. I think a lot of people have probably forgotten, but back in 2016, they did a thing called open banking. They changed where you could set up those MyGov accounts. The Medicare digital health records, you had to opt out of your Medicare digital health record. Why would they have done that 5 years prior to a medical emergency, right? People had forgotten about that now. And, we had started the transition into a digital world. That Klaus Schwab had put out a video, I think I found it on Vice back then, and it said, "Welcome to the fourth industrial revolution," is how he talks, but fourth industrial revolution, you can go and find that on YouTube and see that it's like 6 or 7 years old, where he talks about similar stuff that's happening to the world today, which is pretty freaky. But I guess the writing has been on the wall for, if not multiple decades. I started to experience it around 2016 into the depths of how deep and how bad the financial system really, really is. But it started showing its head at that point. No one was really prepared for it. I think 2020 came around and people, confusion and whatever. 2021, people are sitting there and they're questioning their governments, they're questioning the agendas, they're starting to question the media from telling them of certain things. And being pressured. People have lost, back in an old depression, you'd lose your house, you'd lose your job, you'd lose whatever, you'd lose your family. This time, you're losing access to your own body, right? People would never have thought of that back in the old days or before 2020, but people are now starting to question, and knowledge is out there. There's questions to be answered. People are seeking for truths and whatnot. But 5, 6 years ago, it was stupid. But now it's a reality. And it's funny when you look back on data and you look back on, things that were meant to happen that didn't happen, things that did happen that shouldn't have happened. And, when you look at that data and you look into the future at the data and go, okay, what could happen in the future? What will happen in the future? What won't happen in the future? There's certain things I know that will never happen. There's certain things that I know that will happen. And it's just how they play out is the missing link, because we don't know what levers the controlling powers are using to control us. So I guess, the excitement that I had in 2016 of the GFD, the Global Financial Depression, I was very excited, and people didn't understand that how could Nathan be excited by a depression? There is no symptoms of a depression. But what's the exciting part about the depression? And as we've gone through the last couple of years, I've been the happiest I've ever been in my life, just due to the opportunities and the things that have happened and being able to set yourself up correctly for it. I'm happy because, I've made the right decisions based on it. Most people were scared, at the start of the so-called, medical issue that we've all been faced with. People were like, I'm going to sell my house, going to take all my cash, I need cash, I need cash, I need cash. Because people's mindset is that cash is good. For me, I know cash is trash because I just keep printing more and more of it. So there is opportunities out of there. And I think that there's different things that could play out in the years to come that we all need to be prepared for, and we can live, even if it doesn't happen, well then we can live a better level of life and opportunities out there. So I guess, just simple things of living a better life, people have been growing their food, people send me photos of their veggie gardens, people send me photos of the animals that they're, getting ready to grow up and, make all the vegans happy about, right? People would never have been thinking about this beforehand if the seed wasn't planted in their head of we should be watching out for it. Reality of it is that there will be strong hands in certain markets. There'll be people that will be squeezed out of the market. If you've saved up $100,000, and when I say the word 100,000, it doesn't really sound that much today, and it's not because I've got lots of cash flow and assets and shit like that, is that 100 grand doesn't buy what it used to. Go find a caravan for $100,000, right? You won't get much of a caravan for $100,000 if you can get access to one. Go find a Ford or a Holden. We can't get Holdens anymore, but go find an average car nowadays, and you're looking at 50 grand, 80 grand, 100 grand for just a mid-range sort of car, not anything fancy. So if we look at people that would be saving their money, savers will become losers because they're losing the purchasing ability of buying stuff into the future. There will be times when cash and having access to cash is important, but you don't know when those days will come. Like today, having access to cash, well, then that gives you an opportunity because they've stopped cheap, easy flowing credit, and there's glitches in the market. We're seeing stock markets crash, we're seeing super funds crash, we're seeing crypto markets crash, we might even see property markets crash. We will see property markets crash, right? Like when we were in February 2020, people were shitting bricks. It was only about July 2020 that the market was like, hang on a second, nothing bad's happening, and everyone had cheap, easy money and prices started to rise. So if we look at that little glitch, between February and July 2020, people were in fear. That's the market that we've got now. Interest rates are going up. People are unknowing about, what if they get back to 10%? Let me just be really clear, right? A 10% interest rate a 20% interest rate in 1990 on an average loan at say 200 grand. The price wasn't 200 grand, but let's just assume that it was 200 grand. 200 grand at 20% interest was 40 grand a year, right? 40 grand a year based on an average income of 50 grand a year would be a lot, right? It'll wipe anyone out because it's the bulk of their income. So if we look into 2022 where we are now, an average household income, I said the average income before because you don't need a single parent to run a family household. Now you need two parents to run a family household because they've both been enslaved, because inflation's been robbing us silently in the background and forcing everybody's families to be in a less and lesser position. But that's happened over the last 3 decades. Looking now at an interest rate, an average loan of say $1 million and an interest rate at 3%, well, that's 30 grand a year on a household income of say 150 grand. It's not that bad. But then everything else is pushed up, right? The cost of living, the cost of schooling, the cost of clothing, the cost of whatever it is in our lifestyle is eating up families. So the disposable income isn't that high. But let's assume that interest rates went up on $1 million mortgage to 6% or 7%. 7% is 70 grand a year. That's going to start biting the households a lot today. So, how high can this go with interest rates? How high can the inflation go? They could put interest rates at, 20% again, right? But 20% would be ridiculous, and it wouldn't be possible, right? Let's just use that word. It wouldn't be possible for them to do. It would be mathematically impossible for that to happen. They could try, but it would be very short-lived and would see a massive, massive depression. I would love interest rates to hit 10%. I'd love to see the RBA interest rates hit 5%, because if interest rates hit 5% at the RBA, people would be paying 7%. People would not be able to afford the homes and the lifestyles that they have. They would lose their businesses, they would lose their cars, they would lose lots of things. That would in itself create an opportunity. It's not a good opportunity, like taking advantage of that situation. It could be good for some, for a lot of people, but a lot more people would be in pain. So I don't wish that upon anybody, but being conscious of the movements they could make. An interest rate rise to 5% would be like an interest rate rise to 20% beforehand, because Australians and every other nation around the world have taken on so many stupid levels of debt, not just in their house, but in their cars, their job, their afterpay, people buying food. I went to Pizza Hut or Domino's or something one day and it said afterpay. It's like, you want me to pay for my pizza in 3 months' time in micro payments, right? That's insane. Who would have thought that you could go and eat a pizza and pay for it later? And these are, everybody's hocked to the eyeballs in debt. And, very small movements in the markets will cause very vast difference, outcomes. So looking at the opportunity is that people will be living in fear, take advantage of that, get cheap stuff, know that this period has an expiration date. And the expiration date for this cycle that we're going through is that there will be bonds that will be renewing. So let's say that some country or some corporation has taken up a bond being basically a fixed term loan for a certain period of time. That bond will expire in a 2-year, a 3-year, a 5-year, or a 10-year bond, or even a 1-year bond, and it'll have to be renewed. If the interest rate or the bond yield was at 0.1% beforehand, or 10 basis points, and it goes up to 3% or 300 basis points, that means that the cost of that debt has got up 30 times by the time it gets rolled over. It's physically impossible. Whoever's taken on that debt will blow up, right? Who has taken on that debt? Everybody. Everyone's fearful, oh, my house, this, that, the next thing. Well, the government should be fearful. The corporation should be fearful. Every job that someone works for that's taken on debt, if your business that you work for has debt, well, then you're in a big position to worry. So you need to make a decision whether you can calculate, okay, this is impossible. Where does that run out? And I always said that we would see, and it's actually from back in that video that I was talking about from 2017, I think it was, where I said that interest rates could go up 2 times. I actually predicted that they'd go up 2 times that year. The interest rates in Australia didn't go up from the RBA since 2010, but they should have. And I actually said interest rates would go up that year. But what happened was that the banks had put up the interest rates by 0.25%, independent to the RBA. And the reason why that is because their bonds were rolling over from 2007, and the debt that they had acquired from 2007 had started to expire. The 10-year bonds were rolling over and they had to be renewed at a higher interest rate or a higher bond level. So calculating what is out there, you will see. And the facts are all out there, like I'll share with you guys on a weekly basis what happens if coal prices go up from $100 to $400. Well, now we've got an energy crisis and you can't get power to your house. Otherwise, the power plant will go bankrupt or the consumer will go bankrupt because they can't afford to pay for the power. So how many of these inconsistencies will occur before the whole system starts crashing or they have to re-stimulate the economy? If you go back to your parents or your grandparents and say, how much was the house that you paid or how much was the whatever that you paid in 50 years ago, they'll tell you a house in Sydney was 15 grand. Well, the stamp duty on your property today would be 30 grand on an average property in Sydney. So, these things that sound too far-fetched today, they normally just creep up, right? And it's like cooking the frog slowly, right? If you put a frog into boiling water, it'll jump out. It'll be like, fuck this, I'm out of here. I'm not going to get burnt. It might get some scab on its foot or whatever. It'll be fine. But if you put the frog and you just turn it up every minute, by 1 degree, and you push it up another degree, another degree, another degree, the frog won't realize that it's being cooked, and it'll eventually get cooked in that water. And that's the slow cook that we've had happen to our lifestyle over the last 10 years, 20 years, 30 years, 40 years, 50 years. But now it's going up like a hockey stick, and we're seeing all of that inflation and everything coming home to roost now. And that's where I think the opportunity is, because everybody's looking for this exit to run to, but they should be looking for that exit over there. And if you understand the floor plan of how the economy is working on, you will find the opportunities out there. The opportunities that are out there, where are the opportunities in the current market, but also how you respond to the opportunities, right? I'm seeing people out there, I'm in forums, right? I'm in forums of cryptocurrencies, I'm in forums of properties, I'm seeing forums of different types of other things. I'm seeing people commenting like, should I sell a property now? Is it the best time to sell? Should I be buying crypto? Should I be selling crypto? Whatever the case may be. It's how you respond to a crisis or how you respond to a situation which will determine the outcome that you have. There's these sayings, right? What is it? Your life is the sum of decisions that you've made, right? Like these decisions that you take now could be, are they a short-lived, cheap thrill for the period that you're living in, whether it's a 6 month, a year, 2 years, 3 years, 5 years, or is it, intergenerational sort of decisions that you're making? And I've always thought about the decisions that I'm making and not decisions that I should be looking at right today. I should be looking at them in 10 years, 20 years, 30 years, 40 years time, but looking at, the parameters are out there. So everyone else is scared. If Bitcoin falls to $2,000, would you be scared? Most people will be like, oh, it fell from 90 grand to $2,000. It's not a good buy, blah, blah. That's the time that you should be looking to buy the stuff, right? When it goes up to 90 grand from $2,000, like it did 2 years ago, 3 years ago, that's not the time that you go, oh, I better go and buy into it now at 90 grand because it could go up to 200 grand. If it goes from 90 grand to 200 grand, it's only going to double. It would be the same as it going from 2 grand to 4 grand. So, you'd have that same multiplying effect that you'd have. So I guess looking at the opportunities that are out there, being very clear and concise with your goals, having a good solid budget, and knowing, in a worst case scenario, this is when things start getting rough. These are the other options of what I have. A lot of people are freaking out at the moment because interest rates are going up. Oh, wow, I'm going to go broke, which you should have been planning for a higher interest rate. Certainly when I work with my investors and I send out a cash flow sheet to each and every investor when they buy a property, I put in there a 4% interest rate, not a 3% interest rate, because I've put a 1% buffer in there just in case interest rates did go up. What would their cash flow position be like? So if you have fundamentals that you're working with in your budgeting, then you would be able to go, okay, this is fine. But what we haven't calculated as well is what about the inflation of rents, right? Most of my rents in the last 12 months, both mine personally and my investors, have gone up. Probably the minimum's gone up by about $60. On average, between $80 to $110 per week would be the average rent increase. So, if you've got 100 properties and they go up by $100, that's 10 grand a week. That's 500 grand a year in extra revenue. So, am I really concerned about interest rates? Not really, right? It's better if they're cheaper, but if they go up, well, then there's an opportunity there that people might get. No one out there is talking about this. Everyone, you go into any news outlet, you go into any community, everybody's just fear, 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 and ultimately that'll suppress the market a little bit, no matter which market it is, until another injection of stimulus is there to grow the bubble bigger, whether it be property, whether it be shares, whether it be super fund, whether it be crypto, any market. So I guess the other important thing to be able to take advantage of this time is to understand how inflation works, not just from any trusted government source. Go and dig real deep and do history lessons on what's happened in different countries, what's happened with hyperinflations throughout history, whether it be from the fall of the Roman Empire, what similarities are occurring today in a market compared to 5 years, 10 years, 100 years, 200 years, and whichever nation it was that had fallen. I guess being open to, changes in the world. A lot of people weren't prepared for what happened in the last 2 years, and they won't be prepared for what happens in the next 5 years. Just being diligent, being fluid, being able to move with different markets will give you I guess, the upper hand to take advantage of the opportunities that say present themselves in front of you. I'm very optimistic. I was actually chatting to one of my agents that I deal with on Friday night, which today's Tuesday. I'm filming this thing. On Friday night, I was talking to him, and yeah, talking about what I see happening out there in the economy. I said, I understand that with my offers, sometimes my offers are a little bit slow. I try to take on as many deals that I can buy. This is just me personally on my properties that I'm buying. This is an agent for motels out there. And I said, I believe that your mum and dad sellers are going to get scared and they're going to have lack of people walking around with liquidity, which I want to put more fun deals out there. When I say fun deals, I want to put terms in my deals and, you know, different things that they'd normally say no. This is a market where people would have told you to piss off 2 years ago and they wouldn't want to know your name. This is a conversation where they start messaging you and saying, hey, you know, how you going, what's been happening, etc. Take advantage of that market. This market doesn't stay around forever. So whether we've got a 6-month buyer's market, whether we've got a 1-year buyer's market, whether we've got a 2-year buyer's market, people will think, okay, I'm going to wait for the market to fall, time the bottom, whatever the case may be. Reality is that when the market does change, we're going to see negative interest rates, right? I've talked about negative interest rates. People say, technically, Nathan, the interest rates didn't go negative. They were at 0.1%. We'll wait until they do go negative, right? We've seen what not negative interest rates have done. Where are we going to go with the next batch of stimulus packages? This is a time to be accumulating, taking advantage. I have not been buying crypto at 90 grand a Bitcoin, at 50 grand a Bitcoin, at 80 grand a Bitcoin. I was buying it when it was fuck all, and I'm seeing an opportunity now to pick up stuff cheap. Am I suggesting to go buy Bitcoin? Absolutely not. I think there's a lot more for it to fall. But I'm using this as an example, right? Because we haven't seen the property market crash yet. It might. Who knows, right? But when we look at the cost of bricks have gone up by double, the cost of labour has gone up by triple, the cost of building of a property, there's a lot of people that will be in trouble that would be in that upper end sort of mortgage belt sort of territory. Certainly there's properties that we've been picking up in the last, like here we are in 2020. There's at least a dozen locations that I could think of. I'm not going to rattle them off because that's my IP. A dozen locations where I'm picking up properties here in 2022 where properties are cheaper than what they were 12 years ago. So literally I can buy a property today for 200 for a house on land for 200 in a location where they were selling for 300,000 12 years ago, right? In 12 years, we've seen interest rates drop from 8% to 3% at the bank level. We've seen rents go up from $150 to $300 per week, so they've doubled. We've seen the cost of inflation go up. We've seen the cost of building that asset go up in value. So you can buy things today that are cheaper. And when markets crash, it doesn't mean that all markets crash. It only means some markets crash, some markets going up. Let's just look at coal, for example. Let's just go and look at commodities of, you know, gold and silver. Silver's at a not at the high point, but if we look at copper, for example, right? If you were to be investing into copper today, that's at an all-time high. If you're investing into coal, that is at an all-time high. So not all markets have crashed today. Only some markets have crashed. So same as these markets out there in the paper assets, same with the property markets. Not all markets go up at once, not all markets come down at once. It's important to, you know, find those gaps. I have not been bullish on Sydney for a very long time, for about 4 years, right? I'm seeing opportunities now where I'm buying units in Sydney for 320 grand. I just did one today in a very good LGA, right? A very good LGA. An LGA that most people would want to live in. I've got a unit that I've revalued in the same street beforehand for $450,000 2 years ago. I picked it up for $308,000, right? 308 grand for a 2-bedroom unit in Sydney. I'd buy that because it's great. The cash flow is not the greatest, but you know, you can find that in different locations. But that property would have been selling 5, 6, they were literally selling for over 400,000 in the same complex. The highest sale in there was 420, 410 and 375 2 years, 4 years and 7 years ago. We picked up there today for 308,000. That's a good buy. But that wouldn't have been available 6 months ago, 12 months ago, because the market was very hot. That's the opportunity that I see in this market. Is finding the glitches that are out there, whether it be shares, whether it be property, whether it be crypto, whether it be gold, silver, whether it be businesses. My biggest thing that I'm going to be buying and jumping into, apart from my properties, in the GFC, I used to invest in property and shares. In the last part of the GFD in 2015, 17, 18, 20, 22, up until about now, I've been very big in crypto and property. My biggest thing at the moment is businesses and property, because a lot of business owners that are going to be pushed to this edge right at the moment and are happy to talk because there's not a lot of people out there with liquidity to take over their businesses. So one of my things is doubling down on the business front and doubling down on the property portfolio front. Find those opportunities out there. Have your own strategy that's in line with your goals, with your vision, with your future. What does your future look like? If you need help discovering what that is, reach out to my team. Book in a free discovery session. It's free to have a chat with my team. Have a chat. If you want to use our services, you can pay us for our services. Call our office 1300 367 925. Send us an email at admin@binvested.com.au. And just keep watching, subscribe, Apple Play, Google Play, Spotify, YouTube, and you can find our Tuesday night lives at facebook.com/binvested.com.au. Catch up soon. Keep being awesome. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, and of your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all telling lies, I know what they been telling you. I'm the opposite of Donald Trump of Australia. It's amazing, there for the taking. My time is never wasted, just getting wasted. These girls say I'm really breathtaking. I can't help it if I really misbehaving.